Hey, Andrew Malcolm here from mortgagehq. So why is the Auckland property market and the rest of the New Zealand property market so bloody hot right now? Well, it's because the interest rates are falling so much, and they've fallen, they were 5% not long ago, and they're 2.5%, and it looks like they're going to 2%. So the cost of borrowing for investors is falling, which is pushing prices up. There's my dog Nala, she's come to say hi. So what does this mean? Using some real numbers. If a property investor is looking to buy a $1 million property in Auckland and they're going to borrow 100% of the finance at 2.5%, that $1 million is going to cost them $25,000 a year to borrow that money. And they're going to get some tax efficiency there as well. And so, we can't play right now, sorry. Even if that rental property is only renting for $500 a week, the investor is going to be able to hold on to that property without having it negatively geared. They might have some maintenance costs, some insurance costs, some rates that they might have to pay $5,000 a year or so to hold the property, but the capital gains is easily going to cover that. And 5-10 years ago, even further back, investors have been happy to hold properties in really good areas on negative gearing. And so that principle of holding a quality asset even when it doesn't cash flow, investors are still happy to do that in principle. So that's why even when you see a property that's potentially, let's say it's rented for $700 a week, it's $1 million property, and we rent that for 50 weeks a year, 2 weeks of vacancy. So you're going to get $35,000 of income, and it's going to cost you $25,000 when it's 100% finance. That $10,000 surplus is easily going to cover the rates and the insurance, and it's going to have a little bit left over for maintenance and potentially even to pay a rental, a property manager. So if the rates continue to fall and the borrowing costs for investors continue to drop, we can expect more demand for borrowing. The prices will keep getting pushed up, and as long as there'll be less pressure on rental prices to go up until it gets to a point where it's absolutely ridiculous, and then we can probably see as investors are not happy for the more extensive negative gearing, that the rental prices will have to go up. So when you're a first home buyer or you're a property investor looking to put a deposit down, you're competing against property investors that are 100% financing properties and still getting surpluses. So it's a very challenging environment for people that are looking to allocate hard cash and not 100% finance properties. So you really got to be super quick, or you've got to see something that somebody else doesn't see, and that's where strategies of pulling auctions forward, or investing in areas where maybe other people are not willing to invest. You've got to find some strategies that you can excel at, that maybe other investors can't just quickly come in and copy or steal those properties away from you. So if you've got more questions about why the property market's heating up, let me know at andrew@mhq.co.nz. When you do find that property that you want, you got to corner it, you got to chase it, you got to do whatever you can to get it. And then when you get it, make sure you catch it the way that you need it.